Hey traders, Raghee here, and in this update I'm going to discuss what we're doing as we're waiting for the equity markets to give us a trend. This could be to the upside or until they reach an overbought level where I would feel a little bit more confident shorting into a zone. If you've been following along with the analysis that we've been focused on in terms of the bottoming process, and we've talked about that throughout really the entire month of July, you'll see that it has been a process. It's been a process of studying the macroeconomic factors and really how those macroeconomic factors map to what the Federal Reserve is going to do and say. But we can make it even more simple by understanding the tool that measures them, what we expect from the FOMC. The target rate probabilities, right? This is the Fed Fund futures. Now, gang, I know there's a temptation to talk about what the Fed is or isn't doing and if it's right or wrong. That's cocktail, dinner time talk. That's never going to map to a productive trade. So I always tell my traders, look, am I here to judge what they're doing? No, I can just call them names like chuckleheads. But that's the extent of it. At the end of the day, my job is to look at where their actions and their words are mapping to and set up trades. And that's where, since the beginning of this month, we said, hey, look, the bottom is likely in, which, by the way, someone asked, Rog, what does that mean? Can we buy? No, it just means the bottom is in. Buying means we have a buy setup. And we're traders, gang. We're not just buying and then just parking it and waiting, a year. Any time horizon beyond, say, 6 to 8 weeks really is not a trader time horizon. In fact, at that point, it's just a crystal ball and probably clickbait. So if you have a time horizon for a trade or for follow through that is 12 to 18 months, in other words, if it's an open position and you have expectation for 12 to 18 months, that's probably not a trade. It's probably not a swing trade. It's likely a position trade or even investment. If you have a setup that could organize in the next few months or maybe the next, year, that's not a trade either, right? That's just something that is some supposition. And you want to do what? You need to find evidence that could ultimately become a setup. That means, and this is the frustrating part, do I see the behavior of the Federal Reserve mapping to an end of rate hikes by December? Yes. Are we expecting less by way of rate hikes? Yes, anywhere from 1/4 point to a 1/2 point less than what was even expected a couple weeks ago when the target rate probability was 3.5 to 3.75%. This column all the way to the right. What do we do in the meanwhile? Just blindly buy? Not at all. I don't have a setup on the S&P. I don't have a setup on any of the sectors. Like I said, it's a little bit frustrating. But I'm not going to force a time frame to do something that it's not setting up. What we'll do instead is we'll get opportunistic on the weekly, or what we've been doing pretty consistently now for 3 weeks. For pretty much the time that I've been saying that we're putting in this bottoming process, we have been far more actively day trading. Because if the daily isn't ready yet, I'm not going to force it. If the day trades allow me to be nimble and still participate in these upside surges, so be it. That's okay. And that's exactly what we're doing. So whether that be the S&P or the NASDAQ. Now, the NASDAQ was a setup I did with the crew today, and that was oversold, HPMR zone, and then that turned into an overall uptrend. So this has basically been a long position that we built very early in the morning. This trade was triggered before even 10 a.m. and right in this area. You can see it exactly. Do I mind that we escaped the HPMR? Not at all. It was within the allowable amount of movement that is dictated by volatility. So we have volatility-based stops. We have volatility-based entry zones. This is the HPMR, or the hourly price movement range. We did something else today, and that was we looked at gold, and we looked for, in this case, a trend follow. Take a look at this. Before the bell even rang, we already had an uptrend. If we already have an uptrend, that means dips like this one in the wave are buyable. And that's exactly what we did, right? Let the trend tell you what to do. And if that structure is going to point you in a direction, and then you can get a zone to get a setup, you're right as rain. All right, what else do we do intraday? ZB, right? If the Federal Reserve is going to hike less, that means yields should be doing what? They're going to be falling. So traders, if you're thinking, look, on one hand, we have an overbought 10 and 30 year. I agree. By the way, I like the 10-year overbought zone a little bit better, and it's obviously moving higher today. But if I'm going to get stopped out of this trade, it's not because I was being bullheaded, quite literally, and ignoring that while I would like to see the 10-year sink back into the range, the day trade, this candle here, was one that we could participate in as the market moved higher. So these are the kinds of things that I'm thinking about right now. Accepting that as the Federal Reserve is clearly not messaging that they're going to be tightening more. The Fed Fund futures are clearly messaging that, in fact, they're going to be tightening less and be done by December. Until I get a buy on the daily time frame, whether that be a broader average or whether that be one of the sectors, there's nothing for me to force. And until I have a weekly setup, there's nothing, again, for me to force. And what I'll do is I'll be nimble and say, look, if I don't have a setup on the daily or the weekly, I'll just day trade. And that's exactly what we've been doing. Focusing on the short-term time frames and then having a blank slate every single morning and starting all over again, which is very freeing to not have to be concerned about session after session of organized upward movement or downward movement. One of the reasons day trading is so freeing isn't because we get to sling trades. I like to call myself the world's most boring day trader. One of the reasons day trading is so freeing is because it doesn't require that we have prolonged follow through. And that is right now exactly the way I want to view this market. So think about the short term. Think about the kind of trades we're putting on. What are you using to find support and resistance and trends in the market? Here's a glimpse at what I'm doing and what I'm using. And I will see you all in the next update. Hey traders, Raghee from Simpler Trading. Thank you so much for watching this video. Be sure to leave a like and a comment below. And remember, subscribe and click the bell icon so you'll get notified of the next update. And when you're ready to join me for live trading, be sure to head on over to simplertrading.com. I'll see you in the next update.